So today I'm going to get controversial and I'm going to tell you that the Forex markets do not trend. Now let's just think about that for a second, because it's written out there on so many, marketing, so many different pieces of marketing material and articles and blog posts out there that one of the advantages to trading the FX markets is the volatility and the fact that they're such great markets to trade from a trending perspective. So you get these nice big trends, which will allow the new trader to get involved in the markets, buy pretty much anywhere, and as long as they get the trend right, then they will make money anyway. And to be honest with you, this is very, very dangerous advice, because the simple truth of the matter is that the Forex markets don't trend the way that you think that they would trend. And in this video right here, I'm going to show you exactly why that is and explain why that is, and then give you a couple of alternatives, different markets to look at if you are looking for trend following type markets that would allow for trend following strategies. But before we get into it, please make sure that you are subscribed to the channel and you have hit the bell to stay up to date with all of the notifications as and when I release a video. So, the Forex markets don't trend. I know, a little bit controversial there, because every Tom, Dick and Harry will sit there and write an article and say that one of the main advantages to trading the FX markets is the volatility, is the fact that, you can get involved in the markets anywhere, and as long as you're in the right place, you're going to make money. And whilst, if we go back maybe 15, 20 years, that might be correct. We go back to before the financial crisis. There was a trade called the carry trade, which isn't as popular anymore for some obvious reasons. But before the financial crisis, it was basically a trade where you would get people buying a currency pair with a high interest rate and selling a currency pair with a low interest rate, thereby benefiting from the interest rate differential between the two currencies. They would then leverage up their position and make loads and loads of money just based on the interest rate differential, without having to worry about the direction of the currency pair. Well, they worried a little bit, but the currency pair generally would move in one direction, and that would then become a bit of a self-fulfilling prophecy, and you would get some nice trends in the currency markets. However, in today's world, where we have, obviously artificially held up markets, we have quantitative easing and things like that, and we've got low interest rates around the world, you don't get those types of trades anymore. And with those trades being gone, obviously the trending markets are gone as well. And then we need to think about things on a more fundamental level. So if we didn't have that particular trade there, why is it that the Forex markets won't trend, or why is it that they don't trend? And let me be clear, I'm not saying that you don't get some nice moves in the FX markets. You absolutely do. I just think that if you don't understand where to focus your energy and how to go about trading these markets, and you can come unstuck very, very quickly, and you can lose money very, very quickly. And before we get over to the charts, because I do want to show you a few charts just to walk you through why it is that they don't trend and to kind of just prove this theory to you, let's talk about it on a very, very fundamental level. So when you're trading the FX markets, you're trading currencies, right? You're trading economies. You're trading one currency against another currency. So the pound versus the dollar, the euro versus the pound, the franc versus the yen. You're always trading one currency against another, and hence you're trading one economy against another. So unless something very dramatic happens to one of those economies, and it happens over a prolonged period of time, you're not really going to get those trends, those sort of like multi-year trends that go, from year zero over here and go 10 years down the line, and they're just kind of like one-way movements like that, or even movements that go a little bit like this, a little bit like that, up and sideways, up and sideways. You're not going to get that, because economies move in cycles. They go through phases of expansion and phases of contraction. And during those phases of expansion, you'll find that their currencies will do a particular thing, and depending on the currency, it gets a little bit more complex. You've got to think about whether it's a safe haven currency or not. But anyway, that's for a different video. But during phases of expansion, the currency will do something. During phases of contraction, the currencies will do something else. Okay, and obviously what will happen is that these things move in cycles. So it's not ever going to be a case where it kind of just all the way goes up or all the way goes down. As the currencies and as the economies go through cycles, so will the currency pairs, and hence you aren't going to get those trending movements. And what you're going to get instead is you're going to get periods of nice up movement, periods of nice down movement, but it's not prolonged. This doesn't lend itself to, a buy and hold or a trend following type strategy. So what we're going to do is let's jump over to the charts right now, and let's just kind of take a look at a few currency pairs to try and demonstrate this, and then look at some other assets that potentially you could trade if you are looking for this kind of, of a strategy, a buy and hold or a trend following strategy. So if you look at the chart in front of you, we've got the Euro CAD. Okay, and the Euro CAD, as you can see here, this is a daily chart, first of all, so that's the first thing to know. And you can see that there are periods of up movement, there are periods of down movement, but these are more swings in the markets, I would call them, as opposed to long-term trends. And whilst you could say that, yes, the Euro CAD here, so from the 19th of March 2018 all the way to where it is now, it has kind of moved in a downtrend. You wouldn't say that this is a big trend per se. You would say that actually it's kind of been swinging price action and the price has been gradually moving lower. It hasn't necessarily been, trending lower in the sense of trending that I'm about to show you in some other asset classes. So yes, you can make money as the market kind of comes up and comes to a high, you would then sell that. As it comes to resistance, you would sell it again. As it comes to support, you could do a bit of buying here and there. But what I want you to notice is that by being more active when you're trading currency pairs, you're going to make more money than if you had just sold in one point and tried to buy back at another point. Because first of all, you have to wait an incredibly long period of time for that movement to happen. But secondly, you miss out on all of these swings right here. So I would say that the currency markets lend themselves a lot more to more of a swinging type trade strategy rather than a trending one. So yes, it's undeniable to say that that there isn't a trend here. Yes, there is a minor trend, if you like, but it's by no means a big trend. It's not the sort of trend that you would get on, let's say, a commodity or a stock, for example. And if you think that this just goes for the Euro CAD, let's go look at another currency pair. So let's go and let's go up and down here. Let's do it randomly, right? So you don't think that I'm picking a particular currency pair. I'm going to go up and down, up and down, up and down, up and down, up and down. Stop. Where am I? What was that? Pound. It's the Canadian dollar again. Let's not have the Canadian dollar because we had that with the Euro CAD just now. So let's go with let's say the pound New Zealand. So the pound New Zealand here, we can see that the market, again, there is some directional movement, but the directional movement is short-lived. Now, what that tells us is to be able to make money from these markets, we have to be more active. We have to be a bit more proactive in the way that we go about trading these markets. So yes, we can see that when there's an upwards move, then we need to take advantage of that upwards move. We can't kind of say, oh, there's an upwards move, I'll get involved in it next week or next month or whatever, because by that time it will be over. And the currency markets, whilst they're driven by interest rate differentials and things like that, the problem is that when there isn't really an interest rate differential, so we're living in a world of low interest rates right now, the markets are going to be moved more by sentiment driven moves and things like that. So you're going to get the coronavirus sentiment right now. That's going to move the currency markets. Risk on, risk off, and things like that. They're often more short-lived, which means you're not going to get the big trends that we once did have. Now, if you want to trade trending markets, what can you do? Well, there is a very nice alternative, and that is actually the stock market. Because if you think about the stock market, what it doesn't have that the currency markets have is it doesn't have something that it's trading against. The stock market is going to be driven by the earnings and by the profitability of the company that you're trading. So let's take it, for example, let's go in here and let's look at, let's say Microsoft. Look at Bill Gates' foundation, shall we? Can't spell for a minute there. Microsoft, there we go. So if you look at Microsoft, yes, there are periods where the market moves back, but look here, this truly is a trend. So if you decided to buy somewhere down at the bottom here and just hold, and you close your eyes for a couple of years and you get involved in the right stock, so this one, for example, here, then the market moves up and you're able to make a great deal of money, okay? Depending on how much money you have on the table, obviously, and that's probably wrong to say you can make a great deal of money. It's obviously relative to the position size that you have, but you can make a good return on your investment here, right? Because this is a trending market. And people will then say, well, the problem with stocks is that there are so many out there. So how do you pick the right one? How do you find the one that's going to have these trends? And the truth of the matter is that there are many, many stocks out there, and there are many, many that will provide you with trends like this. You just need to know how to go about picking those stocks. And what I'll do is I'll actually create another video for you, perhaps next week, where I'll show you a very simple but effective way of picking stocks, growth stocks that have the potential to move like this, okay? But what I really kind of want to demonstrate to you from this video right here is that I'm not trying to bash FX at all. That's absolutely not what I'm trying to do. I love Forex. I teach people to trade Forex. So for me to say that it's complete rubbish would be a little bit stupid, really, wouldn't it? No, what I'm trying to say is if you want to be successful here, you have to focus on the things that are going to make you money, right? So if you're reading trend following strategies and things like that, you're reading the turtle traders and, all stories of these people in the 80s and 90s that made money following these big trends in the currency markets or the commodities markets, you're probably barking up the wrong tree. In today's markets, the Forex markets lend themselves very well to price action, to buying support, selling resistance, and trading the momentum moves as and when they happen. Okay, so I hope that all made sense to you. If you want more information about trading FX or trading price action, then there's a link below the video here. Click the link below the video, sign up, and I'll send you some really good information on how to go about trading these markets. Otherwise, make sure you're subscribed to the channel, hit the bell to stay up to date with any notifications. As I said, I'm going to be posting another video next week to show you how you can go about picking stocks that are going to trend, like the ones I just showed you just there. Otherwise, thanks so much for watching. I hope you enjoyed it, and I'll catch you in the next video.